What happens when billions of dollars are locked in a digital battlefield? Welcome to the Stablecoin Wars, a high-stakes conflict that's not just about technology, it's about money, power, and the future of global finance. For years, Tether has dominated this space, but its reign has been anything but peaceful. Tonight, we'll uncover how a wave of powerful rivals tried to dethrone the king, and how, against all odds, Tether not only survived but emerged even stronger. Stablecoins were born from a simple, yet brilliant idea: create a digital dollar that solves crypto's biggest problem, its wild price swings. They promise stability in a world of chaos. Tether, with its USDT token, was the first to truly master this, becoming the lifeblood of the crypto market. But as its empire swelled to tens of billions of dollars, it painted a massive target on its back. Others saw the opportunity and wanted a piece of the action. This is when the challengers entered the ring. First came Circle, with its highly regulated USDC. Then, the world's largest crypto exchange, Binance, launched its own weapon, BUSD. And from the world of decentralized finance, a radical new contender emerged, DAI. Each competitor brought a unique strategy to the fight. Some battled with compliance and regulatory approval, others with the sheer force of their user base, and one with the pure ideology of decentralization. The stage was set for an epic showdown. Leading the charge against Tether was USDC, a stablecoin issued by a powerful partnership between Circle and Coinbase. Its strategy was simple but effective: position itself as the clean, safe, and fully regulated alternative, while Tether was constantly fighting off rumors and regulatory scrutiny about its reserves. USDC presented a pristine image. It boasted of regular audits by top accounting firms and full compliance with U.S. financial regulations. This by-the-book approach made it a darling among institutional investors and cautious corporations looking for a trustworthy digital dollar. USDC became the go-to stablecoin for those who valued safety and transparency above all else. It was the regulatory darling, a stark contrast to Tether's move fast and break things ethos. However, this focus on compliance came with a trade-off. While it was safe, USDC's growth was more measured and slower to scale compared to Tether's explosive, almost viral expansion across the global crypto landscape. While USDC fought its battle on the regulatory front, another giant was preparing its own assault. Binance, the largest and most dominant crypto exchange in the world, unleashed its own stablecoin, BUSD. This wasn't just another token. It was a strategic weapon designed to solidify Binance's control over the market. By integrating BUSD deeply into its ecosystem, offering zero-fee trading pairs and exclusive promotions, Binance created a powerful incentive for its millions of users to adopt its stablecoin. BUSD quickly became the liquidity backbone of the Binance empire, channeling billions of dollars through its platform. For a time, it seemed like an unstoppable force, chipping away at Tether's market share. But this rapid rise also drew unwanted attention. Regulators, particularly in the United States, grew wary of Binance's expanding influence. In a decisive move in early 2023, U.S. authorities ordered Paxos, the official issuer of BUSD, to halt the minting of any new tokens. It was a devastating blow, effectively freezing BUSD's growth and crippling one of Tether's most formidable competitors. Away from the corporate and regulatory battlefields, a different kind of challenger was brewing. This was DAI, a radical experiment born from the decentralized finance, or DeFi, movement. Created by MakerDAO, DAI aimed to build a stablecoin that was truly independent, free from the control of any single company or government. Instead of being backed by dollars and a bank account like Tether or USDC, DAI was collateralized by other cryptocurrencies locked into smart contracts. It was a testament to the crypto-native ideal, a stable currency built by the community, for the community, without middlemen. DAI proved that a stablecoin could exist without relying on the traditional financial system. However, this noble experiment also revealed the inherent risks of decentralization. During periods of extreme market volatility, the system faced severe liquidity crunches. And in a twist of irony, to maintain its stability, DAI became increasingly reliant on centralized stablecoins, like USDC, as a primary form of collateral. partially undermining its own decentralized mission. So, the battle lines were drawn. Each competitor brought a unique weapon to this war for dominance. USDC fought with the shield of compliance and regulation, appealing to the risk-averse. The USD fought with the sword of exchange dominance, leveraging the world's largest user base. DAI fought with the spirit of decentralization, championing a future free from central control. But Tether fought with something more fundamental, more powerful in the world of finance: pure, unadulterated liquidity. Despite the constant criticism, the regulatory pressure, and the rise of seemingly better alternatives, traders, exchanges, and DeFi protocols across the globe kept coming back to USDT. Why? Because in the fast-paced, 24/7 world of crypto, access to deep, reliable liquidity is everything. It's the oxygen that keeps the market alive. And no matter where you looked, from the biggest exchanges to the most obscure corners of DeFi, Tether's liquidity was there. In crypto, liquidity isn't just a feature, it's the ultimate weapon. And in that arena, Tether was, and remains, the undisputed king. The stablecoin wars offer a brutal but essential lesson about the nature of power in the digital age. They show us that first-mover advantage and the network effects that follow can be far more powerful than superior technology, regulatory approval, or even ideological purity. Tether wasn't necessarily the best audited or the most innovative, but it was the first to achieve critical mass. It became the default, the standard, the scaling point for the entire industry. Once its liquidity network was established, it became incredibly difficult to displace. This story reminds us that in the world of crypto, survival isn't just about building a great product. It's about winning the war for network effects and owning the flow of money itself. And in that game, for now, Tether still wears the crown. Thanks for watching. If you enjoyed this story and want to understand the forces shaping the future of finance, make sure to like this video and subscribe to our channel. We'll see you in the next one.